who's a good buddy of mine. Met him through some universal friends that we have at Young Professionals in Energy, big group that I highly recommend looking into. And Daniel's also my swimming buddy, puts me in the Pacific Ocean when it's like 50 degrees and I want to die. But aside that, Daniel is also, aside from being a wonderful human being, getting my buttons of ice cold water, he is the founder of a company called Atwater Strategies, and he's also an advisor at another company called Vnesto. Now, what these guys do is they're advisors for Merrill Lynch, Berkshire Hathaway, multitudes of other companies, but you focus on something called impact investing and circular economy. So a lot of people don't know what exactly that means. I myself am not an economist like you are. If you could just explain to the general public in very simple terms what exactly that means and why it's important right now, especially right now.
Sure. So the term, thank you, Wendy, and good morning, Joy, and Wendy, and thank you so much for having me. We were talking earlier in the green room about having fun with this, and I think this is a fun topic for us to talk about for our generation and for future generations. We often get into the ideology that it's got to be like gloom and doom to have significance, and that's not the reality. The reality is that these situations are happening in our world right now, regardless if we're serious about it or not, and we need to take action, and that's what impact investing is all about. Impact investing takes the mindset that we know the financial markets are arguably the most powerful engine in humanity. We know that media has a big role in how we look at the world and how we are motivated by our behavior. And so impact investing looks at these investments and says, how can we make money for corporate America and do it in a way that's responsible? The concept of circular economy is really a subset to impact investing. Circular economy essentially is an environmental term that means you promote an economy that runs from cradle to cradle, basically. The idea that
what that means, because some people may not understand that.
Yeah, it's essentially what that means is if you invest in an area where it has sustainable returns. So for example, if we have waste, we have sewage and we have waste that, you know, every country has and has to deal with. What do you do with that? Well, oftentimes it goes to a landfill and just sits there. So are there applications you can do with the landfill as an investment that will promote that waste being reused so it's sustainable? So oftentimes there are biodigestive facilities, manufacturing facilities that are put into these landfills to basically take the waste, inject certain bacteria so that the waste is broken down and turned into some form of gas or propane, so that propane can be used again. So there's certain applications, essentially there's certain applications to investing where you're having a product that comes as a result, but that product comes from a mindset that's sustainable.
Actually, no,
I kind of do that. I do that with one of my clients. I work for a rendering plant. For those of you who don't know what rendering is, it is when you take the animal byproducts, incinerate them because they are not able to go into a landfill, and they're not environmentally friendly that way. And you make other products out of them, such as dog food used to be a product that came out of that. And more recently, rendering companies have been selling to either biodiesel companies, churning waste into energy, that sort of thing. So you're starting off with a product of waste, and then you're turning it into something viable through many processes and many regulatory avenues to make it viable and create that zero waste.
Exactly. One recent example I gave, and I'm going to apologize in advance for saying this, but if you ever watch Mad Max Beyond Thunderdome, Bartertown. That's what we're doing. But more importantly, Daniel, you're doing a lot of work in the Sub-Sahara and the Middle East before the lockdown, but you were doing a lot of work internationally with this. So could you, I don't know if it's proprietary information or not, but could you share with us some of the stuff you're focusing on specifically with diversity inclusion, the LGBTQ environment, circular economy with that, because this is all very important and I think needs to be translated back into the US, personally?
Oh, thank you, Wendy. That's a really cool question. And I'm going to go ahead and break that down into a few parts, because I see your Wonder Woman mug, and I know you're able to accomplish all things, but I'm just a wee man here. So let me break down that in a few different focus areas. In terms of geographic focus, sub-Saharan Africa, the Middle East, essentially the global South, is a huge area of ignorance in the investment community, because of, frankly, color and our kind of stereotypes of the world through Disney, right? And so there's a huge investment, well, really, like faux pas that exists where, and I'd like to pull up the statistic. I don't have it right in front of me, but essentially the global investment community is fiercely underweight in investing in emerging markets. It's really quite silly if you consider the fact that the baby boomer segment, the demographic set of the baby boomer, represents about 77 million in terms of population size, and has been our benchmark to assess our target audience for a long time, up until the millennial set has become the new transfer of demographic outlook. If you consider that the emerging market middle class is projected to be at 4.1 billion by 2030 in terms of demographic size. So consider the baby boomers are 77 million in demographic size, and the emerging market middle class size is roughly 4.1 billion in 9 years. So if you consider that just in terms of customer base, you consider that markets like sub-Saharan Africa, which have the largest population of people under the age of 20 in the world. Even in Latin America, we know that there's large populations in countries that are relatively, like, adolescents and young adults. The demographic of customer base in these markets is really big. So that's just one thing to look at. I personally had the professional experience of working abroad for the last 12 years. And currently, as you mentioned, we're working with Vnesto Capital, which is a company which arranges debt and equity investments for sustainable infrastructure abroad, largely in concert with development finance institutions like the U.S. International Development Finance Corporation, which is formerly known as OPIC, the Overseas Private Investment Corporation. It's a quasi-government, approved allocation of 60 billion in revolving debt for international infrastructure projects that are earmarked for sustainable returns. And they're not just required to have sustainable returns. They also have to have women in leadership, a whole host of other requirements, local managerial impact, local economic, social economic impact. So there's a lot of benefit there. If I could talk also quickly about just the geopolitical environment that supports the emerging markets right now. With the Biden administration, we're expecting to see a lot of, excuse my financial terms. I was about to say tailwinds. we're expecting that the international markets will be very attractive as well, for a few reasons. The U.S.-China relationship is expected to benefit or be better. A lot of the trade war tensions that were in the Trump administration, we're expecting to ease. Global trade deals are expected to now pick up and be, just more benefiting for multilateral agreements. We're expecting agreements like NAFTA and others that have basically stimulated multilateral trade and investment to increase in the Biden administration. And in addition to that, one challenge we're experiencing is the US dollar is expected to go down in the next few years because of the impact of COVID and other things. Statistics are showing right now that if the US dollar drops 1%, foreign equities will go up 4%. Yeah. So we're expecting that the emerging markets will be really, really attractive. And I could talk a lot about sub-Saharan Africa, the global South, But
so you're saying it's financially desirable probably to look outside of our own borders right now.
Yeah, the emerging markets are going to be the most attractive investment class, definitely in the near term and in the long term, in our opinion.
Where's most of the money kind of flowing from these days? Is it from PE outlets? Private equity, large banks, or some sort of government finance program. You hear a lot of talk about it, and that there's a lot of money for emerging markets. I just have yet to see a lot of it sprout its head in the circles that I'm running in. So
there's certainly groups, public investment groups that are focused on emerging markets. But as we talked about it, there's a bit of a dearth between the possibilities and what people are actually investing in now. With that being said, because of the nature of global supply chain management, because of the nature of Fortune 500 corporations that are really global in terms of where they get their materials, where they get their labor, et cetera, the simple fact that the ESG investment criteria is one of the fastest growing areas in the stock market,
yes,
there demonstrates that there will be a focus on the emerging markets, indirectly to start and then directly later. So, and we can get all into that. ESG, just for folks who don't know, is environmental social governance. Essentially, there's certain criteria where if you invest in certain stocks, the ESG stocks need to hit certain criteria that are considered socially responsible investments.
And right now, that criteria is kind of all over the place. They are working on consolidating it, but there are multitudes of regulatory agencies. So it's a little challenging to navigate those waters right now. If you had one investment strategy, like one thing to invest in overseas, what do you personally see as the most attractive to you?
Our absolute essential needs: waste, water, and energy, and potential infrastructure that supports like overall economic growth, like roads, bridges, utilities, like anything that furthers technology advancement, that enables people to communicate more, do more business. I think are the biggest areas, but the whole area of managing waste, producing energy, conserving water, access to water, like
water is now considered a commodity in California, so it can be traded as oil and gas.
Yeah, so whatever can be used to basically stimulate a more sustainable environment for humanity is Shocking. Where the greatest investment opportunity is right now.
Which is good that we're actually seeing, the changeover, especially in finance, where people are now focusing on, the stakeholders, so the community, the people, rather than shareholders, which are the investors. Now, everybody likes their shares to go up. Everybody likes to make money. I get it. I do too. But more importantly, as long as it's not damaging the world around us. I think, Joy, you were about to say something before I so rudely interrupted you.
No, I wasn't. Okay. I'm here. I'm just more so thinking along with what was popping into my head was the difference between social impact programs as they go on. What are the hot topics? So the hot topics right now are, backing Elon Musk and Tesla and a shoot to Mars, and then Amazon. That is creating a marketplace that you can shop from home, but yet, we're getting all of these boxes at home. And they do have a sustainability program as well.
It's not just boxes, it's the packaging that comes with it.
Right.
And the inks and the dyes and the da-da-da-da-da-da. Yeah.
And what both of their social impact programs kind of look like and how divergent they are. But yet at the same time, these are the two go-to companies right now, right? These are the two richest men in the world right now. What do we do to keep a solid message of how we can affect social impact across larger companies or leaders? Because pretty soon, with everything that's even going on in politics, these are going to be our leaders. When they say, take me to your leader, it is going to be larger companies that have the final say.
Daniel.
So that was just my point.
Yeah.
I'll let Daniel pick up on
it's
that one.
interesting. We as humans are constantly evolving in our awareness and our consciousness about our own impact. I think the COVID experience has helped everybody see how we should be more conscientious about our own impact, even our own health, and how that impacts other people's healths. There's a correlation there as it relates to how corporations are constantly evolving and transforming as well. We saw, there was like the desire to be more environmentally friendly and Al Gore came out with this documentary and everyone felt like we have to do something. And then there was corporate America came on board and there was the greenwashing that took place, right?
Oh,
like there was
that was huge.
That took place. And then over time, people pushed for it. And then chief sustainability officers started getting hired, and then it was like, we should recycle in the office, right? Not like, let's look at our global supply chain and keep our vendors accountable and all those
You
things.
are absolutely correct on that.
It's really taken 15, 20 years at least for us to get to that point. And now we're starting to see diversity and inclusion become such an important topic where chief diversity officers being hired. And it seems like if you're a person of color, that's your only job opportunity right now.
That at least pays well, yeah.
And it, but the point is that the corporations will start to evolve. And what's really important is that the customer base keeps the corporation accountable, and does not take what is being promoted to them as a good merit in diversity or sustainability as face value as good. It really should be considered as greenwashing until proven otherwise. Is my personal
I mean, one of the things I've noticed in business when they hire, chief sustainability officers, and in the past couple of years, they've gotten significantly better in that. But when you talk to previous people who are like, oh yeah, I've been doing sustainability for 15 years, it's like, you recycle. That's great.
Wait, it's even worse than that. You actually are smart enough to put a can in the blue can instead of the black trash can. And you believe you get kudos for that.
My favorite is when you go to the garbage can, they've got the slot for the green, they've got the slot for the regular trash, but underneath it's the same garbage can. There's no division.
Right. And then you want the award for sustainability. Yeah.
Exactly. I think people need to be brought to the carpet and held accountable that if you're going to say you're going to do it, until proven otherwise, you're greenwashing. I love that.
Right. Well, Wendy, you made a really good point, which was that it really I'm sorry, I lost my train of thought, but it's essentially what you were saying was that there's a need for the sustainability, but we need to make sure that there is a proper criteria that is uniform and formal that everyone can agree upon.
Yes.
And what you mentioned with the ESG environment, especially in the stock market with stocks, which is our hugest economic driver, is that the ESG requirement has largely been undefined or non-agreed upon by everybody.
Yes, actively working on that. Yeah.
Inside of this challenge that exists is there's a lot of desire for it to become uniform because the market size for the ESG area is larger. And actually, sorry, I pulled some statistics on just the growth of ESG. If it's okay, I'll share those.
Please.
So according to the Global Sustainable Investment Alliance, over 30 trillion in assets under management are now in some form of socially responsible investing. Again, that's like, a very broad, term that could be qualified by many things, but at least the overall, base of social responsibility investing is huge. And that number is up 30% since 2016.
Oh, wow.
So that's a big thing. the ESG area has attracted over 8.4 billion in net flows just in the first half of 2019. So that in the first half of 2019, that broke the previous record from 2018, which was 5.4 billion in inflows in the ESG area. So the ESG area is really growing large. It's projected that 35 billion in ESG funds. There's actually been 35 billion in ESG funds since 2013. That's how much has actually been in the area.
Do you think it might be growing too fast where it will explode upon itself or overextend?
Well, I think what happens is that we've gone in this thing where it's like we were completely irresponsible, and then now we're like, okay, we have to be responsible, but then this version of responsible is completely undefined and it's unsustainable. So
yes.
We're going to kind of go back to the middle of like, okay, that's more realistic.
Yes. So and for people, for the general, when we talk about ESG and being responsible as a company, I'll give you an example. Sneakers. So people say, okay, I'll buy my sneakers in a store. They don't know where the sneaker comes from. Is it coming from a third world country where children are harvesting rubber from rubber tree plants for pennies, a day? That's where it comes in. Living wages for people that are collecting the materials. And mind you, all of this is done so the profit at the end of the day, so your $200 sneakers, most of the profit's going back to the company, not to the people who provided the rubber, right, the canvas, the metal, right, all of that stuff. So that is now being addressed. That is now being recognized. And Walmart was put to task years ago. They had their green initiative, which was complete farce. They got caught, and then they realized, okay, we did what was wrong. And now they're making huge headway in fixing that and being more sustainable and more socially conscious. So just to give viewers an idea of what we're talking about this, it's not just something United States. It's not just one company doing their one thing. It's going, you have to just kind of dilate that lens out and look at the whole picture of where the beginning materials start to where the very end comes in the distribution. So right, on that, we've reached our end of 20 minutes. Actually went over, which is totally fine. But
Daniel, you definitely have to come back. There are so many
much more
that are going to be happening with the new administration. Yeah, you've definitely got to come back, because I love talking to you, and your finance background is congruent with mine. So
I'm thinking April might be.
Really, it's been a pleasure.
Now, Daniel, how can people find you if they need advice on impact investing and strategy?
LinkedIn's actually a really great resource to find me. You can also go through either one of you.
I'll also when I post the video, I'll put links on.
We keep a relatively low profile web presence, but you can also go to www.vnestocapital.com, which is VNESTOCAPITAL.com, as a resource, and go to the contact us page, and they can find me there.
Perfect. Well, thank you again. And just to remind everyone, tomorrow afternoon, we have a special guest, Pavitra, talking about water reclamation with her company, Deep Roots. So I will send info on that. Thank you again, Daniel, so much. And keep your schedule open in April. We're going to want to bring you back.
All right, cool. Thank you. Thank you, Joy. Thank you, Wendy.
Bye-bye. Have a good day, everybody.